those in favor में से aye, those against में से no.
Our top story tonight, the government's battle against black money gets a major fillip. The anti-black money bill passed by the Lok Sabha does not need the Rajya Sabha's approval.
For the government finds itself on the back foot in the Rajya Sabha, the land bill may be referred to a 30-member joint parliamentary committee headed by SS Ahluwalia. The GST amendment bill may be referred to a select committee.
More relief for foreign portfolio investors when it comes to minimum alternate tax. The CBDT says it will not issue any fresh notices till the Justice AP Shah committee submits its report.
On street signs, the latest relief on minimum alternate tax may have come in after market hours, but the markets continue to cheer that move that originally began last week. Benchmark indices gained nearly 2% each. The Nifty reclaims 8,300. The Sensex rallies 400 points.
Tamil Nadu breaks it out into celebration as the Karnataka High Court acquits AIADMK Chief Jayalalitha of all corruption charges. The verdict paves the way for Jayalalitha's return to power after almost 10 months.
A twist in the Satyam case, a Hyderabad Sessions Court suspends the guilty verdict and the 7-year jail sentence handed down to Ramalinga Raju and 9 others grants them bail.
Veteran banker KV Kamath is appointed president of the $100 billion new development bank of BRIC nations. Will have to step down from the boards of ICICI Bank and Infosys.
The Commerce Ministry is all set to seek cabinet approval to make it mandatory for any multinational company winning a government tender worth over 300 crore rupees to source a part of its requirements from domestic manufacturers. This, even as Jaguar Land Rover plans to shift its entire Defender production line to India.
In terms of Sikka's strategy for the long term, it is a bold bet.
Not everyone is buying Infosys CEO Vishal Sikka's strategy to turn around the IT giant's fortunes. Global industry watcher Gartner says Sikka's plans to focus on platforms and digital innovation may be exciting, but would not do much to get the company out of the woods.
And on the hour, the Comptroller and Auditor General trains its guns on GMR-led Delhi International Airport, seeks a special audit to ascertain whether the airport diverted revenues from 9 joint ventures for non-aeronautical functions.
All the valuation premium India had versus other emerging markets at the end of last year has unwound, so it's actually now as cheap as it was in November 2013.
Risk for India has always been that people have been overweight, they had their goods built already, and that, external to India, some other market might have been of interest, Korea, China, maybe even LATAM.
We like some of these cyclicals, both industrial cyclicals and consumer cyclicals, and we also like the private sector financials, and that should be the core of the portfolio.
In general, the sectors I'm quite interested in would be the cyclical sectors. Okay. They have not done as well as sometimes as defensive sectors.
With less than 24 hours to go before Prime Minister Narendra Modi starts engaging with the dragon, FIRs are busy comparing the two superpowers that are, of course, India and China. While Jonathan Garner of Morgan Stanley remains bullish on India, Harold van der Linde of HSBC is choosing China over India for the time being. And Shireen has travelled to China to spearhead that coverage. So you're with Surbhi and me tonight. Hi, Surbhi.
Hi, Nantara. Yes, that's been the debate on the Lal Street. All this money, whether it's moving from India to China, is it a short-term bump up that we're seeing in Chinese equities, whether India is a better long-term bet? Lots of that conversation coming up over the next 1 hour and the next 1 week, but lots of domestic action as well that we will be talking about. So lots to kickstart off. Let's start, of course, with what's been happening as far as the Lal Street action is concerned, beginning with today's market report. What a glorious start it's been to the week. The Nifty climbed back above the 8,300 mark. The Sensex has gained over 400 points to shut shop at 27,507. Apart from some aggressive buying in select blue chip counters, the stars of the day were PSU Bank stocks led by Bank of Baroda, which posted a great set of numbers. Now, Chris Roberts of Asianomics says that the worst is over for the Indian markets. Jim O'Neill, former chairman of Goldman Sachs Asset Management, adds that Indian markets are unlikely to see further declines.
In India's come back, I think, round about 10%, something like that. And it's come back to a level where we think there should be very good support. Around the early 8,000s, that should be a good level for the market. And I think the most encouraging thing is if you look at the stocks which are in uptrends, I can't find a single one that's broken important support. So for me, I find that very encouraging, and we've recently been adding exposure to India and recommending a few more names.
As a personal investor as well as an analyst, I increased my personal exposure to Indian equities about 18 months ago, just as we were starting the campaign for the election. And about 5 weeks ago, after the Indian budget, I actually sold my position because I thought the oil issue was going to be less friendly. And in addition, after the budget, I'm not sure what new good policy news in the near future could happen.
Okay, so those are two big views on India. Well, with foreign investors making a comeback into the Indian markets, the currency markets were also in for some brisk action. The currency managed to recover a little bit. It closed about 6 paise stronger at 63.86 to the dollars. FIIs finally turning net buyers in the equity markets after several days of savage selling that we've seen. Nentara?
Well, that's some market action, Surbhi, but today's big development coming in from New Delhi, from Parliament. The government managing to get its anti-black money bill passed to the lower house. Remember, this bill provides for penalty and taxes of up to 120%, along with criminal prosecution for all of those that have parked black money abroad. This is a money bill, and therefore the Rajya Sabha's approval is not needed. Finance Minister Arun Jaitley, while talking on this bill, had told the opposition to not develop cold feet. Jaitley rejected the demands of the opposition parties to refer it to a standing committee, arguing that any delay in enacting this legislation would provide an opportunity to offenders to transfer unaccounted overseas wealth to unknown destinations. The bill provides for rigorous imprisonment of up to 10 years for offenders. There is a compliance window that is going to be provided, and if offenders comply within that window, they will have to pay 30% tax and 30% penalty. This is all for black money stashed abroad. As far as black money in India goes, the finance minister saying in the lower house that he will any day be taking to cabinet a modified version of the Benami Act, which is far more modern and relevant in today's time. CNBC TV 18 Jyotipan Abhiyan caught up with the Minister of State for Finance, Jayant Sinha, for more on the black money bill. He began by asking the minister whether the bill would need to go to Rajya Sabha for a discussion at all.
A money bill. Money bills are sent to the Rajya Sabha simply for discussion and then are returned. They are not voted upon in the Rajya Sabha. And as far as the money bill is concerned, you have 2 weeks within which to hold the discussion and to return it. If it's not done within 2 weeks, then it automatically comes back and then it goes to the President for the Presidency.
My last question to you, sir, one very interesting provision there is about a compliance window. So rules and details related to compliance window, when do we expect that?
Those will be sorted out soon.
Since last 1.5 years, this matter is before the public domain. Everybody was telling across the party line, even the people across the country, all the politicians used to tell that. So today we have decided to see that this bill should be passed in this session only. For that reason, we took up the matter today in the Parliament. And practically with certain reservations and all that, everybody has supported the bill. Certainly it will create a new initiative as far as the black money of our country in other countries are concerned.
Reactions pouring in. That piece of legislation passed by the Lok Sabha around 7:30 p.m. Now, for all practical purposes, this is now the law. That's because it's a money bill, like I was telling you, and therefore does not need to be passed by the upper house, only debated. That's the word coming in from Revenue Secretary Shaktikanta Das.
Black money bill has been passed in the Lok Sabha today, and as per parliamentary procedure, it goes to the Rajya Sabha, which is required under the law to return the bill. Thereafter, the legislative process will be complete, and once that is over, the law will be notified. and that is with regard to the black money bill. Once the black money bill is notified, which will be after the legislative process in Parliament is complete, thereafter a separate notification will be issued giving the duration of the compliance window. So you have to wait for that notification to be issued.
Now that's not the only development in New Delhi today. Lots of action in the capital. The government, which is still in damage control mode when it comes to the issue of minimum alternate tax on foreign portfolio investors. The Central Board of Direct Taxes of the CBDT has directed its officers not to undertake any action for the recovery of demand notices already raised on foreign companies. It has also said that fresh notices or reopening of cases should also be put on hold till the AP Shah panel set up by the government last week submits its report. This, of course, is only provided the case is not time-barred.
There is a panel which the Finance Minister has announced in the Rajya Sabha the other day that the panel is being constituted, and naturally we'll have to wait for the outcome of their recommendations, and after that the government will decide. Now, in the meantime, only cases which get time barred, naturally the law, the process has to be followed and the notices have to be issued. In other cases, we will not take coercive action or rush through fresh notices.
No coercive action, no new fresh cases against FIIs when we talk about MAT. The government may have met quite a bit of success in the Lok Sabha, especially over the black money bill, but a very different story altogether in Rajya Sabha, which was adjourned almost 10 times. The opposition parties in Rajya Sabha demanded the resignation of Road Minister Nitin Gadkari over an adverse CAG report. In fact, the opposition wouldn't even allow Nitin Gadkari to make his clarificatory remarks. Sources indicate the government may all be set to send the crucial constitutional amendment bill on GST to a select panel. This is not what the government wants to do, it's what the opposition is demanding. Remember, the government needs two-thirds majority in the Rajya Sabha to pass the constitutional amendment bill, and with the combative opposition, it's going to be very difficult to get those numbers. Meanwhile, the government also tabled the land bill today, and that was in the Lok Sabha amid huge uproar against that piece of legislation. With numbers falling short in the Rajya Sabha, the government may have no choice but to send their key bill to a joint panel of 30 MPs from both the upper and the lower house. Both panels, that is on the GST as well as the land bill, will only have to submit their respective reports in the first week of the monsoon session of Parliament. Since the ongoing Parliament session ends on Wednesday, we do understand there is no question of extending this Parliament session, and it should be with these two bills, especially the GST Constitutional Amendment Bill, making its way to select panel. It will be very interesting to see what happens to that April 1st, 2016 deadline.
Absolutely. In fact, we were just getting to that, Nandara. Meanwhile, with that GST Constitutional Amendment Bill being referred to a select panel, the government's plans of implementing the new indirect tax regime from the 1st of April 2016 could be in jeopardy, as this means that the next steps have to be put on hold till the select panel has submitted its report in Parliament. Now, CNBC TV 18's Sapna Das caught up with the Minister of State for Finance, Jayant Sinha, and started off by asking him whether the government can actually stick to the timelines that it promised.
Select panels are always time-bound, but we have said over and over again that our goal is to be able to implement it on April 1, 2016. On the one hand, we want there to be a durable national consensus on the GST. It is a very far-reaching tax reform, probably in some ways the most important and significant tax reform since independence, and particularly as far as indirect taxes are concerned. So it's obviously important to build that national consensus, while on the other hand, we also want it expedited and implemented as quickly as possible, because as we all know, the benefits to our economy, to our people, to our consumers are very significant. So we have to balance both those two considerations, building the consensus while at the same time ensuring that the benefits are available to our businesses and our consumers as quickly as possible.
So, are we still confident in the timeline, or that's really a smaller issue given the larger,
No, we are working very hard towards that timeline.
Working hard towards maintaining those timelines. Sapna raised that same question with the Revenue Secretary as well, speaking about the GST bill and what happens next. Let's listen into the views.
With regard to the GST, it was listed in the business of the Rajya Sabha today.
Yeah.
It could not come up. Now, we'll have to wait and see for the next 2 days. It should come up for discussion.
All right, so some more clarity on these matters, and we have now with us Mr. Subhash Kashyap, who is joining in, leading constitutional expert. Sir, good evening. Thank you so much for taking this call and being with us on India Business Hour. So, as things stand now, it seems the GST bill will be going to a select committee. The land bill will be going to a joint committee of parliament, which involves 30 parliamentarians. What are the next steps? And first of all, this land joint committee for land, will it be time-bound, or can discussions go on ad nauseum?
No, but time depends upon the motion. The motion may sometimes contain the time limit. So I do not know whether they have what time they have mentioned. And it can, of course, then be extended if necessary.
Mr. Kashyap, if I could just come to the black money case, you've even been a petitioner for that in the Supreme Court. I wanted to get your reaction today on the bill that has been passed in the Lok Sabha, what this is going to mean, and also the finance minister saying that he's going to take any day to cabinet a modified version of the Benami Act, which is going to be crucial to attack black money domestically, what's in India. If I could get your reactions on both of these and what your priorities will be for the modified Benami Act.
Well, so far as the Benami Act is concerned, as you know, Benami Act was passed many years ago, but it remained unimplemented all these years. And now that the government is bringing a new Benami law, it is to be welcomed. And that will affect the black money within the country. The black money bill that has been
amended and modified to make sure that it's indeed a success. What are the three key changes, the three key modifications that are needed in the Benami Act?
The confiscation of property, that is the most important thing. Confiscation of ill-gotten wealth, that is the most important. And the basic thing is, whatever the law, the question will depend upon actual implementation and the political will and its strength to implement the provisions, and absolute care to be taken that nothing is done on partisan considerations. That is, in the real sense, equality before law, if that can be enforced. So these
Mr. Kashyap, like I introduced you, you're one of the three, as I was introducing you, you're one of the petitioners in the black money case in the Supreme Court.
That's right.
It's coming up for a hearing tomorrow in the Supreme Court. The finance minister has also raised certain concerns in the floor of the parliament today, talking about the flow of exchange of information, how two countries have cited treaty violations when we talk about this exchange of information. What is your strategy going forward, yours and the other petitioners, be it Mr. Ram Jethmalani or Mr. KPS Gill, going forward to ensure that the government is actually able to attack black money abroad?
Well, personally, I have been of the view that apart from all the laws, what is necessary is the will of the government to really bring back the black money. One simple thing as a citizen I feel that could be done was that every citizen of India going abroad should be asked to make a declaration that he does not have any account abroad or any property abroad. And if he has, he should declare it. And if later it is proved to be wrong, then that property will stand confiscated by the government of India, or that property will belong to the government of India. That is not something for which you need any foreign government sanction or any treaty or anything. That is controlling your own citizens. Now that has not been done. I think that is a very simple thing which can be done without any law, without anything, by an executive order. Now why that has not been done? All passport holders, all who go abroad, should be made to make such a declaration when they are leaving the country.
Sir, Mr. Kashyap, just to come back to the land bill, move away from the black money bill and come back to land for a bit, just to understand, what are the constitutional avenues now available before the government? Can it simply go ahead and re-promulgate the ordinance till the time this joint panel gives its report and the parliament moves on the bill in either direction? Would
so far as the constitution and law are concerned, it can be reformulated, and if the government wants to have the law in operation, continued operation, then they would have to reformulate the ordinance, and then of course it will come back to the House. And as for the Rajya Sabha, if the Rajya Sabha does not pass the bill passed by Lok Sabha within 6 months, then they can go to a joint committee. Also, after the committee has reported, if the Rajya Sabha rejects the bill, then also they can go to a joint committee. So ultimately, it seems that joint committee may be one way out or one solution if the opposition does not relent. The other possibility is that during this period, through processes of political management and bargaining and give and take and accommodation, the government may be able to show better floor management and the bill through after it is voted by the state.
Okay, all right, sir. Thanks so much for joining us and clarifying some of those all-important issues on black money and the land bill. Well, it's been a very busy day in Tara. Black money, land, GST, lots of taxation issues playing out in the capital today.
And we are not done yet. So we have another 2 days of Parliament left, and the Finance Minister making it quite clear that this week itself the Cabinet is going to be discussing the modified version of the Benami Act. We'll probably get Mr. Kashyap back on India Business Hours then. Moving on, it's jubilation time in Chennai. Definitely as far as for all those AIAI DMK supporters go, that's after the party chief and former Tamil Nadu Chief Minister Jayalalitha was acquitted by the Karnataka High Court in an 18-year-old disappropriationate asset case. The High Court has overturned the Sessions Court order which had found her and 4 others guilty in the case. This acquittal sets the stage for Jayalalitha to make a comeback to the top post in the state. That swearing-in ceremony expected on 17th. The announcement has also given a fillip to the big-ticket investments that were stuck in the pipeline for over a year in Tamil Nadu. Jude Sanat now joining us with that story. Jude, what's the business impact of Jayalalitha's acquittal?
So let's take a look at what exactly these investments are. The state government has set for itself a 1 lakh crore target by the end of this year to bring in all these investments. 76,000 crore of this will happen at the Global Investors Meet scheduled to take place in September. 23,000 crore of the 76,000 crore will happen in Tamil Nadu's power sector. There are big names like Mahindra, which has already promised a 4,000 crore investment plan to set up a couple of plants in Tamil Nadu. Renault Nissan has chalked up a 5,000 crore expansion plan, in fact, as part of its Oragadam facility near Chennai. There are other big names like Yamaha with a proposed two-wheeler plant that will happen along Old Mahabalipuram Road. ITC is coming up with a couple of food plants with a 500 crore investment. Nokia Networks is also planning on establishing a telecom equipment manufacturing facility, and the Chennai Metro Rail will finally see the green signal from the state government. So infrastructure, investments certainly looking good. The Global Investment Summit certainly looking promising.
But Global Investor Forum with someone like a charismatic leader like Jayalalitha at the helm will definitely make a difference to the image of a government. That, I think, will be the first issue. But in the process, to reinforce the confidence that the state government and the ADMK as a ruling party would want to give the investor community, particularly the foreign investors, they may come up with some of the clearances that are pending in the coming weeks.
All right, on to our special coverage, Asian Tigers. We will bring you some of the biggest FIIs with their views on the Indian markets. First up, Jonathan Garner of Morgan Stanley, who says that he's overweight on India, and he adds that India has replaced China as their topmost emerging market. CNBC TV 18's Shireen Bhan spoke exclusively with him in Hong Kong. Here's an excerpt of that conversation.
India still has sensitivity to oil and also to global food prices, but our base case view is that we're not going to get significant increases, certainly year on year, in either oil or food from last year, and that actually, therefore, India's current account position is going to remain approximately balanced, which is one of the best current account positions I've ever seen India in, and I've covered India for almost 20 years now. So it's certainly true that you have seen somewhat of a backup in bond yields in India recently, and that may also have played a role in the equity market weakness. But we suspect that that's an opportunity again in the bond market So there's been somewhat of a sort of a counter-trend move in relation to bond yields, reflecting that increase in the oil price.
But, you know, coming back to the equity markets, and we talked about the 10% correction, what do you attribute this? Is this just profit being taken off the table? Is it people rebalancing their portfolios, putting liquidity into other markets that are looking better at this point in time? What do you attribute this to, and how concerned are foreign investors about this entire imbroglio related to the FII MAT taxation?
So India, as I said, has recently replaced China as our top pick market in global emerging markets, and China has outperformed India very substantially year to date. And I think one of the reasons that we were not maximum overweight India before was positioning. So if you actually look at foreign institutional investors' holdings in India, they built up very substantially both before and after last year's election. So by the end of last year, the average global emerging market fund was essentially double weighted on India. Now that meant that for further performance in the market, you needed either the domestic retail investor or truly global money that's not EM or Asia ex-Japan benchmark to be attracted towards India. And neither of those two things have happened yet. But I would say in relation to domestic retail investor interest in India, if those bond yields can move lower and the macro turns, then it's very likely that domestic retail investor interest will grow in India. We've seen that actually in China recently.
You know, it's been about a year since the Modi government took office, and there was a lot of expectations on what this government would actually be able to do to deliver on the reforms agenda. Perhaps expectations ran ahead of fundamentals, expectations ran ahead of reality. At this point in time, would it be fair to say that the mood has changed significantly on the reform front? Because, you know, you talk to some people and they believe that euphoria has now turned to despair. You talk to others, they believe euphoria has turned to realism. Which camp do you belong to? I would imagine the realistic camp.
Well, let's try and be precise about the kind of reforms that our foreign institutional clients really want to see from India. So I think the GST is really important, and there it looks that we are actually getting progress. It's passed the lower house, it should pass the upper house. The other really big one is land acquisition, which is much less certain in terms of actually passing in terms of the reform agenda. And then, in addition, I think foreign institutional investors want to see that budget deficit structurally lower, and that must mean addressing issues like the size of the Indian civil service. Again, if you look back at other really, truly reformist governments where you're inheriting similar problems to those that India actually faces structurally, addressing the functioning of the civil service in India is extremely important.
But do you get any sense that we've moved the barometer at all on that parameter?
I think Mr. Modi's done some great work from the top in terms of actually pushing the buttons and actually getting things like the road building program working. And we can see that in some of the capex numbers that I mentioned earlier.
But
I think you still have to
spending, isn't it, on infrastructure?
Right, but what you still have to do is to deal with the actual government current consumption spending and the size of the civil service and civil service pay. And that's extremely important. It's the kind of things that Ronald Reagan or Mrs. Thatcher dealt with when they inherited similar problems in the 1980s in the UK or US.
On the infrastructure side, and you know, the government has allocated a substantial amount of spending, both as far as the road sector is concerned, the railway sector is concerned. Private spending on infrastructure hasn't kicked in just yet, and that is because we're suffering from broken balance sheets, so to speak, within the private sector. Do you really see private capex picking up anytime soon, specifically as far as the infrastructure side of the story is concerned? And how confident do you feel about the turnaround for the infrastructure story?
I think what you need there is stability, particularly around the taxation system, which is really crucial. If you're going to invest in a long-run project and you're going to try and make returns over many years, which is how these infrastructure projects work, you've got to have some certainty about the rules of the game that you're operating in, particularly the taxation system. And again, I think that needs more clarification going forward.
But on the taxation system, and specifically the issue with regards to the levy of MAT on FIIs and FPIs, how much of a concern is this? Because the kind of outflows that we've seen, especially between the 15th of April to about now, which is almost about $2 billion of FII money being pulled out of the market, a lot of people believe that this is linked directly to the confusion over the MAT levy.
Yes, so retrospective taxation is never a good idea for any country, and you need ideally a very simple corporate and income tax system that is fairly administered and is consistently administered through time, and that remains a challenge for India.
But this doesn't worry you, clearly.
Well, it's one of a number of things that we look at. As I mentioned, we were actually slightly overweight India by the end of last year. and into early this year, we've now increased it very substantially because on our view, this near-term pickup in economic growth is just about the best story that we see in our general coverage universe. One of the things that concerns us about China is we've had a very good run in the market, but actually economic growth is still losing momentum. In Indonesia, it's losing momentum quite significantly in the same areas, actually, things like automobiles and capex, where we can see early signs of a pickup in India. So, yes, India has a number of challenges that still remain, structural challenges, but the near-term growth number that we're forecasting for this year is 7.7%, and that's an acceleration from last year, and it's actually a better performance than other markets we cover.
A better performance than China as well, in fact, significantly better over China. I know you won't talk stock-specific, but in terms of sectors that excite you about India, given the current valuations, what are you looking at?
So we like some of these cyclicals, both industrial cyclicals and consumer cyclicals, and we also like the private sector financials, and that should be the core of the portfolio. There are other areas, obviously, historically, pharmaceuticals and software names, and some quality stocks in consumer staples that have generated very high returns. And those were actually the names that we liked when we were much more concerned about India before Mr. Modi was elected. But right now, we think it's right to take more cyclicality, add more cyclicality to the portfolio.
Just specifically as far as the pharmaceutical and software sector is concerned, and the linkage to the rupee, because we've seen the rupee now at a 20-month low. What's the outlook as far as the currency is concerned, and the impact on sectors like pharma, IT, for instance?
We think going forward it's going to be broadly stable in, let's say, a 62 to 64 range. We're actually at the higher end of that range right now, probably linked to the move up in oil that you mentioned earlier and the slight move higher in bond yields. So maybe coming back down towards the 62 level. And that's, again, a better outlook than we see, particularly for other countries' currencies in southern Asia. So we would see currencies like the Indonesian rupiah and the Thai baht and the Malaysian ringgit all actually weaker than the Indian rupee going forward.